Hello friends, welcome to CEC live lecture series. I am Dr. Divya Verma, Associate Professor in Guru Gobind Singh Indraprasth University, Delhi, and we are doing a series on fintech, and today's topic of discussion is payment and settlement system in India. As previously discussed, payment and settlement system is the most important backbone or the underlying technology which is operating the whole of the banking system. So from barter system where human being was transacting in term with each other with buying goods for goods and services for services, now we have currency which is available. So we have a payment system, there is a central bank, there is banking industry. So you deposit money in a bank and you withdraw money from a bank, and we understand what bank is, we understand the common terminology related to bank. Another major technological change that happened was that this payment system has now become electronic. So we have internet banking facilities, we have NEFT, RTGS, IMPS, UPI, and other such ways of transferring money without even visiting a bank branch, without even looking at the physical money. So that is the kind of revolutionary development that has happened. So the underlying payment system operates in the same way. So how and what led this growth of the payment system, and how this payment system will ultimately help the fintech industry to flourish and the other e-commerce businesses to flourish is what we are trying to understand in today's discussion. So there are digital payments which we can make, and we know a lot of these products because these are like now household words which we are using. So more digital payment options are now available to consumers. Many payment systems in India are now operating 24/7. All these developments have nudged the consumer towards digital payments because of a lot of convenience which these digital payments are offering. In mid-80s and early 90s, RBI took various initiatives to bring the technology-based solution to banking system. And one such solution was introduced in 1990, that was ECS credit scheme, for handling bulk and repetitive payments required like salary, interest, dividend payment and corporate and other institutions. Later on, RBI also introduced ECS debit scheme, and with the introduction of NACH by NPCI, most of the ECS centers were migrated to NACH in 2020. Then we have National Automated Clearing House. NACH is a centralized ECS system operating by NPCI. NACH was formed to consolidate multiple ECS systems running across the country into one centralized system. It operates both credit and NACH debit payment system. NACH debit operates to collect transactions from many accounts to a destination account, like collection of various utility payments pertaining to telephone, electricity, water, gas charges. It also facilitates collection of periodic installments towards loan, investment in mutual fund, insurance premium, and the destination bank and the account are identified based on account number, IFSC or MICR codes. NACH works on the strength of mandate given by customers for allowing debit to their accounts at specified frequency. Apart from paper mandate, paperless mandates can also be created electronically. The system also identifies the destination account based on Aadhaar number through APBS leg of NACH. NACH is the most popular and prominent mode of direct benefit transfer credits to beneficiary by the government. We have credit and debit card payments. So card payment is an important payment instrument which has replaced the use of cash, at least at the retail outlets, e-commerce sites and other parts of the world. Indian consumers are now frequently using these cards for payments, even for smaller transactions. This has driven by more people holding cards and greater availability of point of sale terminals. In comparison to credit card, debit card are more popular in India, and there are a lot of reasons why people would do that. There is low demand due to Indian household being traditionally oriented towards savings rather than credit culture. So we will find that debit cards are more used than credit card. There are supply concerns, especially with majority of labor force who are in unorganized sector. The card are not issued to these people. The Indian ethos to pay for goods and services on purchase instead of running up credit lines. So that is another reason. And we have also seen that in the credit card, people do not wait for the credit period to be over. They instead pay ahead of the deadline, and in many cases even keep a favorable credit balance in the credit card. So debit and credit card based payment registered a CAGR of 35% and 33% in terms of volume and value respectively for over last 10 years. We have data contactless cards. So RBI has also issued, and it's an innovation in the card payment ecosystem by using the contactless technology, which allowed the cardholder to tap and go. These cards are becoming increasingly popular. To provide convenience and use of such cards, RBI has permitted relaxation of AFA, that is additional factor of authentication, in case of card present transactions using near field communication enabled EMV chip, and PIN cards for smaller value up to 2000. Transaction beyond this limit can have can be in contactless mode but with AFA. So this relaxation in AFA is not applicable for ATM transactions and card not present transactions. The limit was subsequently revised to 5,000 with effect from 2021. National Common Mobility Card was also recently launched in March 2019 as a combo card offering a combination of debit and credit with a prepaid card where the debit credit component would be used in online environment, whereas the prepaid component would be used in the offline environment wherein offline payments are permitted. The offline prepaid transactions would be affected without AFA, which was permitted only for the transit payments to begin with, owing to fast checkout time required for such transactions. Combo cards, while offering such convenience of not having carry multiple cards in a wallet, raise issue related to the uncertain regulate turf because of multiple masters, which have to be addressed through coordination, and they are working on it. The recent development of RuPay cards. RuPay is a homegrown card payment network which was introduced in 2012 through NPCI. The drive for cashless economy or less cash economy in the wake of demonetization in 2016 and issue of RuPay cards for BSBT accounts has increased user acceptance. In interiors of the country, we are paying a card with the novelty just 5 years back. So RuPay has its popular debit card and it is increasingly accepted credit version as well. Countries that encourage domestic cards have been observed to be faster in moving away from cash. India is a late entrant into the domestic card market, and in 2017 the share of RuPay was only 15%. However, in November 2020, it is about 60.36 crore RuPay cards issued by nearly 1158 banks. The market share of RuPay has increased to more than 60% of the total cards issued. A significant portion of RuPay card is in the nature of debit card, with only 9.7 lakh credit card issued as on November 2020. RuPay started its international foray through its acceptance and issue in Bhutan, achieved with the integration of Bhutan Financial Switch with NFS. RTGS is a popular term, real-time gross settlement. It is available round the clock with effect from 2020 December. The implementation of RTGS is 24/7 and it's expected to facilitate global integration of Indian financial markets, supporting India's effort to develop international financial centers and provide wider payment flexibility to domestic corporates and institutions. There are primarily 4 types of participants in RTGS. Central bank. We have restricted participants like some particular type of facilities to be provided like primary dealers, clearing house for settlement, MNSB files, domestically located banks, domestically located non-banks, domestically located brokers, dealers, FMIs, branches of foreign banks located in India and have direct access to RTGS in India. NEFT is also very popular and we all know and has been using it. It is National Electronic Fund Transfer. It's a part of centralized payment system and is a retail payment system owned and operated by RBI. At the time of its implementation in November 2005, NEFT was started only with 8 members. And the end of 2020, NEFT covers a network of 2,222 member banks and their 1,70,966 branches. These member banks also extend NEFT facility to customers through sub-members. There are no floor or ceiling for the amount that can be transferred in a single transaction, because of which NEFT has emerged as a popular hybrid payment system with average transaction value of approximately 10 lakh rupees. Let's talk about IMPS, Immediate Payment Services. IMPS is again for fast payment system, 24/7 it is available. It was introduced in 2010. India was the fourth country after South Korea, UK and South Africa to introduce IMPS. The system provides for real-time transfer of funds between remitter and beneficiary with a deferred net settlement between the banks. The system facilitates push transactions with per transaction limit of 2 lakhs. IMPS is a multi-channel system that can be accessed using ATM, mobile, internet banking, bank branches. The system was upgraded to enable parameters such as account number, IFSC, or by using bank account link Aadhaar number. If we talk about UPI, it's a mobile-based 365/24/7 fast payment system where a user can send and receive money instantly through virtual payment address. It is set by user itself. The unique feature of VPA-based transaction is the secure aspect of UPI architecture, as it obviates the need of sharing account or bank details in the remitter. It supports person to person and supports person to merchant. Payment can also be used over smartphone, app-based, feature phone, USSD-based and at merchant location, app-based. UPI facilitates immediate money transfer through pull and push payment technology. Merchant payments, utility bills, QR code, non-financial transactions such as mobile banking registration, balance inquiry can also be carried out using UPI. It powers multiple bank accounts in a single mobile application of any participating bank. Funds can be transferred using VPA or account number with the bank code or IFSC. This framework of UPI comprises of NPCI as network and settlement system provider, banks as a payment system provider, and issuers and beneficiary banks, apart from TPAP such as Google Pay, Truecaller, WhatsApp, etc. Non-banking PPI issuers have been allowed to provide this facility in an interoperable manner to the PPI wallet holder. Transactions are carried out through mobile devices with two-factor authentication using device binding and UPI PIN as a security. The UPI PIN is encrypted using public key infrastructure technology, while the transaction data is stored in encrypted form in app provider system. The system that went live in September 2016 with the transaction limit of 1 lakh was upgraded to UPI 2.0 in 2018 with a pen transaction limit of 2 lakh and a few additional features to enhance customer convenience, safety and security transactions. UPI has grown to be the fastest payment system in the world, with many jurisdictions eager to replicate the system. Given its popularity and acceptance, there are many innovations possible to extend UPI to desktop browsers, feature phones, offline payments as well as recurring payments. Now let's understand this payment infrastructure elements and arrangement. So there is a front end and there is a back end. So there is an overlay system and the closed loop system which exists for the payment mechanism. Now if you look at the elements of this payment infrastructure, a payment system is a set of instruments, procedures and rules for the transfer of funds. Depending upon payment type, payment systems can be qualified as retail or wholesale. Retail payments are used between individuals and businesses, while wholesale payments are between the banks, financial market infrastructure and other institutions. At the same time, retail payment systems execute large volume or relatively low volume transactions, while wholesale payment systems generally handle large value payments. When it comes to the operator of a payment system, retail payment systems are usually run by public and private sector providers, while wholesale payment systems are typically owned and operated by central banks. A payment system's infrastructure involves front-end and back-end arrangements. Front-end arrangements involve elements that initiate the payment, while back-end arrangement processes, clear and settle the payments. So the discussion is about the front-end arrangement of retail payments, for which we can distinguish three elements: the underlying transaction account, the payment instrument, and the service or the channel access. The underlying transaction account represents the source of the funds and generally encompasses bank account and e-money transactions. Payment instruments are used to initiate the transfer of value. They can be further classified into cash and cashless instruments, credit transfer, direct debit cards, e-money based instruments. So the service channel access point connects the payer and the payment system provider. They can be differentiated into in-person and remote access points. The shift to digital payment services, it is accelerating with the network of traditional access points thinning out and fewer options for consumers to access cash. Now, if we look at what is e-money, e-money refers to a debt-like instrument that entity issues on receipt of funds for purpose of facilitating payment transactions. So basically it has a balance sheet perspective. E-money is a fixed value chain on the balance sheet of the entity issuing it. When a user exchanges fiat currency for e-money, she purchases claim against the entity, which represents a liability on the issuing entity balance sheet, and that claim is typically redeemable in fiat currency at pre-established face value upon demand, which makes it similar to sight opposite deposits held by the bank. Demonetized, denominated either in the same currency as the underlying balance sheet liability or as fictitious unit of account that is tied to sovereign currency. So e-money has a risk perspective, is a transaction device that offers stability of value through redemption guarantee provided by the issuer. If you look at the user perspective, e-money is an attractive means of payment because of its convenience. Then there is a technical perspective. E-money is an electronic store of money value on technical devices. There are two broad types. First, including hardware-based products like physical devices like credit card, and software-based product where the purchasing power resides in specialized softwares. So looking at the growth and development in the payment and settlement system, RBI has created a document in 2019 called Payment Vision 2021. It had envisaged the empower every Indian with access to bouquet of e-payment options which is safe, secure, convenient, quick and affordable, and has set 4 goalposts of competition, cost, convenience and confidence with 36 specific action points and 12 outcomes. If you look at these goalposts, they have been accomplished through the following initiatives. First one is competition, which includes between 2019 to 21 creation of regulatory sandboxes, open access of centralized payment system to non-bank PSOs, facilitation of small value digital payments in offline mode on-tap authorization for payment system, internationalization of domestic payment system, feature phone-based payment service organizations. If you look at the cost, waiver of charges in RTGS and NEFT, review of interchange fees for implementation of payment infrastructure development fund, increasing legal entity identifier which is used for large value cross-border and domestic payment framework to PAs. Then comes convenience, availability of NEFT, RTGS, National Automated Clearing House on 24/7, 36, 365 basis, harmonization of turnaround time for resolution and compensation in respect of failed transactions, e-mandate for recurring transactions using cards, PPI, UPI relaxation of AFA, measure requirements for small value card, presents transactions, setting up a 24/7 helpline for digital payment and services. Talking about the confidence, the framework there is a framework designed for regulating payment aggregators, tokenization of card transactions, card on file centralization payment, fraud information registry, geotagging of payment system touch points and JAM. Along with this, the recent developments in terms of establishment of Reserve Bank Innovation Hub, framework for security of card transactions like switch on off facility, guidelines on limiting customer liability in case of unauthorized excess using prepaid instruments, enabling online dispute resolution for digital payments, review of scope and coverage of system audit of payment system, streamlining the quick perpetual validity and enabling online dispute resolution, review of scope and coverage of system audit of payment systems, streamlining of quick response code, that is QR code, perpetual validity for certificate of authorization, construction of RBI digital payment index has been achieved. So there's a Payment Vision 2025 document prepared by RBI which has a core theme on e-payments for everyone, everywhere, every time. It has a vision to provide every user with safe, secure, fast, convenient, accessible and affordable e-payment options. It is presented across 5 anchor goalposts of integrity, inclusion, innovation, institutionalization and internationalization. Inclusion would be promoted through collection and publication of disintegrated payment data, leading to policy enhancement which required customer awareness, identifying spatial penetration of digital payment acceptance infrastructure across states, and reviewing the scope of PIDF schemes, with increased involvement in discussion of global standards setting bodies, including interlinkage with fast payment system of other jurisdiction, with focus on adjoining corridors will also be further in this vision document. This will improve trade and commerce and reduce cost and remittances. To strengthen the integrity, we use 2FA, two-factor authentication, and additional factor of authentication. Usually OTP based authentication is used, and due to increases in cases of phishing, wishing, smishing, mode for divulgence of customer confidential details, alternate risk-based authentication mechanisms leveraging behavioral biometrics, historical payments, digital tokens, in-app notifications shall be explored. Contactless payments in offline modes was permitted to with the launch of National Common introduction of pay name lookup, service of checking the beneficiary's actual name will also be explored with other funds transfers like RTGS, NEFT, IMPS and mobility card. To provide a security cover to defrauded customers, issuers of payment instruments, a study on the scope and feasibility of creation of DPPF shall be undertaken. The document also says that the money market and capital market currently operate at fixed hours. RTGS and NEFT is 24/7. So extension of trading hours of these markets to enable longer market availability for trading and settlement will also be facilitated. RBI has been actively taking measures to enhance customer awareness through its electronic banking awareness and training, e-Bath program, and organizing campaigns on safe use of digital payment modes through various media channels. Regulation of big tech and fintechs need to be in the payment system, need to develop more. The APBS operated by NPCI has been helping the government and government agencies in successfully channelizing government subsidies to the intended beneficiary as a part of direct benefit transfer scheme. To migrate all the government receipts and payment to digital mode, Reserve Bank shall coordinate with the central and state governments to integrate their payments platform with the Reserve Bank's e-Kuber. If we look at the innovation, the planned proposals include that all merchant payments transactions done using internet are presently processed through payment gateways and payment aggregators. As this practice entails delay in merchant settlement, a framework shall be introduced that all transactions are also processed through a payment system. New guidelines for buy now pay later services will be prepared, which was developed in a new payment mode alongside the existing payment mode like card, UPI and net banking. The channel facilitated by few payment aggregators leverages existing nodal account to route the payment between BNPL customer and a merchant. CBDC, central banking digital currency, has been gaining much traction with 86% of central banks globally reviewing the feasibility of cross-border transactions. as well as internal benefits. CBDC is also an area of interest for cross-border payment, and Reserve Bank is working towards introduction of CBDC in India, and various such cases are also being looked at. So, implementing a national card switch to process card transactions at this is also looked at. There are 10 expected outcomes which we are looking at, which RBI is looking at from this vision document. So, what kind of outcomes? So, volume of check-based payment has to reduce. There should be more than 3% increase in number of digital payment transactions. UPI to registered average annualized growth, increase in payment transaction turnover vis-a-vis GDP to 8%, increase in debit card transaction at point of sale by 20%. So, like this, looking at this vision document, it looks very promising and impressive that we are going to evolve furthermore on the payment system in India. If we look at the success story of UPI, RuPay card and NPCI, India has become, in one way we can say that India is leading the way the digital payment revolution is being conducted, and it is a success story that the world is looking at us. So, NPCI has been a game changer for small vendors, new businesses, for fintech organizations to flourish, and UPI, if you look at the data, UPI recorded 7,404 crore transactions worth rupees 125 lakh crore in December 2022. This figure rose to 1.5 trillion. And the success of UPI is not getting unnoticed around the world. So, a lot of other countries are looking, like Singapore, UK, Australia, Canada, Bhutan, UAE and the US. They are looking at that how we can replicate this kind of a payment system. So, that's all for today on our discussion on payment and settlement system in India. A good and efficient payment system would definitely help and keep the money of investors as well as the citizens of the country very safe. So, all of these are the issues related to payment and settlement system, and that's all for today. Thank you so much. For any queries, you can contact us on the numbers given below. Thank you.